Closed-end funds are typically viewed as income investments. Thinking about the coronavirus impact on our economy, how have yields been affected? John Cole Scott is the founder of the Active Investment Company Alliance, also known as its acronym AICA, and Chief Investment Officer of Closed-End Fund Advisors. John, you've been in the business for 20 years now. What's your perspective?
So as you look at the reaction to coronavirus in Q1 of 2020 and how it's impacting yield for both equities and credits, we really think about how leverage costs have come down, and that's a net benefit for many of the levered closed-end funds, whether they're listed BDCs, traditional funds, or non-listed BDCs or traditional funds. And with that, it does remind us that it's often better in our experience that you take less risky credits and lever them prudently to enhance yield than just reach further down the risk profile to the hairiest credits possible. All funds are different, and this is simply the way we see it going forward. So as we think about sustainable yield for the work that I do in my closed-end fund advisors investment firm work, we really analyze sectors and managers, but also the closed-end fundedness of an investment, the wrapper and expenses and corporate governance and the leverage, but also the way the boards tend to set and maintain their dividend policies. As we think about yield, it's helpful. A closed-end fund portfolio, especially with interval funds and BDCs, you are accessing a multi-sector, multi-manager portfolio, and you can take your opinions on sectors, managers, leverage, and your tax situation, and build what you need as an advisor for your clients or an investor for yourself.
Looking ahead, how are the different closed-end fund areas positioned for success versus the iffy conditions we face in the second half of the year? And how will the AICA Online Summit on August 13th help professionals and investors?
It's really important to think about the three market factors impacting 2020. One, there's a presidential election coming up in November, and there'll be one of two options. Second, there's a virus impacting much of every conversational item we've had, whether in regular life or investment life, since March of 2020. Do we have a vaccine? When's it available? When can we get back together in person again safely? Third, we were in a recession. Are we still in a recession? Are we in a recovery, or is the data worse to come? Those three questions are going to be paramount to what options we do for our clients at closed-end fund advisors and what we'd recommend investors and advisors do for their clients. With this conference, we're bringing together a lot of extensive experience, the ability to go after funds that are sometimes single sector and sometimes that wander. We've got specialists in certain types of credit and those that see the lay of the land across a 30,000-foot view. Very useful for me, in my opinion, as we build our portfolios for our clients. We then have a lot of different sectors, whether it's credit or equity, from real estate to diversified to global to US, really what's going on for the markets.
Looking at the wide span of closed-end fund products, including business development companies, also known as BDCs, and interval funds, how important are discounts?
So as I think about the Q3, Q4 outlook, we always like for listed products to think about discounts. Not always the same thing for BDCs. In fact, the BDC panel at this event was sought out those funds trading the highest over net asset value generally over time as a source of the conversation to talk about why, what do they do, both uniquely and then typically, and then generally at the same time, to give shareholders that confidence and trust to give them a value over net asset value. Very common for the best BDCs to over time trade well above book value. Very uncommon for traditional closed-end funds. That's an important concept to learn, probably the one you need to learn the fastest if you're new to listed BDCs.
How much interest are you finding in interval funds, which use the closed-end fund structure but may or may not be listed on an exchange?
Interval funds. We have managers in this space that have never been in a closed-end fund before and welcome them. They're not at this event, but Lord Abbett has a high yield fund, and that's a great addition to what's going on. There's sponsors like BlackRock with both BDCs and interval funds and a large selection of equity, taxable, and muni tax rate. We also have sponsors like Ares, which has a listed closed-end fund, the largest and probably best known BDC, but then also an interval fund. So what I love is we're not just saying this is the manager for you, or this is the structure for you. But there's different ways to access managers and sectors with different resources and different options to build your portfolio as an investor or as an advisor.
What's needed to help address the massive uncertainty looming in our collective future?
So as we think about what's needed to allow investors and advisors to make good decisions, we've done a couple things. Closed-end fund advisors and our CEF data business has fueled a free data feed to AICA to launch it so that there is a non-listed profile page for all interval and tender offer funds. We then offer the access to a filter and search tool for the listed fund profiles that we have on CEF data already available before AICA. We also, you have access to the indices. We have 33 indices that cover diversified, equity, taxable credit, and tax-free credit to help understand trends less inherent to a sponsor and attempting to look at discounts and yield and other important factors in the portfolio. When we think about the different minds coming to the conference, we have BDC analysts helping out with some of the event. We've got institutional owners, the largest and best known folks really doing the best institutional work, not yield focused, actual total return focused. It's kind of cool. I'm excited. We then have some of the larger closed-end fund institutional investors. We have Lazard, and we have RMB Capital, and we have Doug Bond, who works at a closed-end fund sponsor but builds products of closed-end funds and brings a tremendous experience from the sponsor perspective and the underlying research. We then have so many other we have almost 60 moderators and presenters coming to you.
Wrapping up, we understand the AICA online conference is on August 13th. Why should we be sure to attend?
The best and the brightest minds will be here across structures, across sectors, across different credit platforms. It's like no closed-end fund conference you've ever seen. It's an extension of the success we had last year in November with our intimate event in Manhattan amongst a similar group of folks, but we're now able to access this through hundreds and potentially thousands of viewers because of the power of the internet.
Thanks, John. John Cole-Scott, founder of AICA, the Active Investment Company Alliance.